Is now a good time to buy a house in 2020? That is the burning question that everybody wants to know. And it really comes down to, how are you going to pay for this house? If you have decided that you are going to get a mortgage for this house, then in this video, you're going to get the basic knowledge of the financing process, the role that interest rates play in the real estate marketplace, and I invited Chad from Guild Mortgage to go over all the changes that the mortgage industry is facing right now in response to everything that's going on in the world right now. I post videos like this every week, so if you want to see more content exactly like this about Kansas City real estate, make sure to subscribe, like this video, comment. I respond to all my comments, and let's jump right in. All right, so most people do not want to pay cash for a house. It just doesn't really make sense when getting a mortgage is so cheap. The health of real estate marketplace really comes down to, what's the cost of getting a loan? Now, when the cost of getting a loan, which is the interest rates on this mortgage, is low, then your monthly mortgage payment will be lower, and therefore a lot of people are able to qualify for a mortgage, and a lot of buyers go out there and have these goals to go purchase a home, which is awesome. And what happens because of that is there's not enough homes to go around for all of these buyers, and so it becomes a seller's market, and home prices go up a little bit. Once you decide that it makes sense for you to buy a house right now, now is the time, and you want to get financing for this house as opposed to buying it with cash, then you would start shopping around for a loan. Now, there's 3 primary mortgage markets that you can get a loan from, and all of these different lenders have different programs that they offer. And so I invited Chad from Guild Mortgage. He's going to speak a little bit about the mortgage markets and just some changes that we are seeing right now with the virus and everything that's going on in the world right now.
But as far as financing a property, maybe now with the coronavirus going on, maybe you might want to take a little more conservative approach. Not saying you don't buy because of your finances, but just take a little more deeper look at them. Make sure you feel good about your employment. Make sure you feel good about the money you have, as far as your budget that's in your bank, checkings account, your liquid assets. And then just make sure you have enough for a rainy day. And make sure maybe you double that compared to what you usually do just because of the coronavirus. It just really comes down to everybody's differences with, am I comfortable with this much money in the bank account? Am I comfortable with the type of job I'm doing and the possible trickle-down effect of the coronavirus? So that's the only thing I would be thinking about on the financing side. Interest rates are awesome. They really have never been any lower. So you're getting a great time to buy in that regard. And most of the affordable loan programs are still available. There's FHA, VA, USDA, obviously conventional. Some of the zero down stuff is gone. Like the MHDC, some lenders are doing it, some aren't. We have not opened it back up yet. But some of the zero down, like I said, grant money and affordable lending isn't quite there yet. But again, all the standard solid loans, FHA, VA, USD, are still available. So if you're thinking about buying, definitely this is still a great time. Just maybe understand your job situation and make sure you're comfortable with that. And then I'll give a little context. Basically, there's a few different types of lenders. There's your federally deposited banks. Those are like your banks, like Commerce Bank and Bank of America. They're federally chartered banks who, for the most part, house their own loans. We are what's called a mortgage banker, where we only do mortgages. We don't do like deposits, and we don't do this and that. We just do mortgages, and we service our own loans. A lot of people call us a lender, which, that's fine. But then there's lenders that are correspondent and direct lenders, where they fund at closing. They fund the purchase, pay title, but then they sell that to an investor, usually in mortgage-backed securities or bundled somehow. So what's happened is these investors who buy these loans have now gotten hesitant and want higher credit scores, want lower DTIs, all this different things. So that has caused the lenders that are selling their loans and the servicers and all of us really on some level to up our requirements just a little bit. Now, the only thing we have done as a servicer is instead of 580, we now require 600 for FHA and VA. Conventional, we still require 620, and this is just credit. Obviously, I still have to run it through the system and make sure people qualify. But as far as any changes, that's the only thing we've changed. A lot of these lenders who do actually sell their loans to investors on the secondary market, they have made drastic changes. They've maybe gone from, I've heard ranges all the way from, they've gone up to 660, 680, 700 credit score minimums, DTI maybe under 50, might need additional reserves in your bank account. There's just a lot of things those lenders have done to protect themselves to where they can actually sell the loan. Because if you originate a $200,000, $300,000, $400,000 loan and you can't sell it, a lot of these lenders aren't in the position to hang on to that loan, or then they have to sell it what's called scratch and dent, which they take a hit. Long story short, as far as qualifying with us, that's the main person I can speak of. The only thing that's changed specifically is the credit requirement from 580 to 600. Now, I will say, when I get an application on somebody, we get credit, their debt, their income, their assets. I run all that through an automated system called DU, which is Desktop Underwriter, and that's a Fannie Freddie. Or it's a Fannie Mae system. So every lender runs it through DU, who does loans. And so just this weekend, that system got more strict. So it's an algorithm. So I can't say it likes this and not that. I just now have to run it through, and maybe those clients who have lower credit, higher DTI, not much money in the bank, borrowing money for a down payment, those borrowers, it might not like as much now as it did 2-3 weeks ago. Mm-hmm. But really, those two things with my company are the only things that have really changed. So minimum 600 credit for FHA, VA, 620 for conventional, and then running it through the systems a little more tight.
So as you can see, different lenders have different variation of loan products, and they have different underwriting requirements. So it really comes down to you shopping around, finding the right product for you, for your repayment. Now, the financing process, step by step, it's 5 steps, and we're just going to go through them real quickly so you have a good foundation for you when you go out shopping for these loans. So the first step is you would go out and you would get a pre-qualification from a lender that you choose. And in this pre-qualification, you will get pre-qualified on your credit score. The lender will look at your employment, your ability to repay this loan. So they really dig deep and they make sure that you meet all the requirements. So shop around. The second step in this is once you find the property, your lender will now go in and make sure that your house appraises for the value that you are going to pay for this house. And the reason why they do this is because once you buy this house, your house will be collateral in case something happens and you're unable to pay for the home. So they go out, they appraise the home to make sure that this home has value in it. So if something were to happen, you can't repay it, they can go sell that house or recuperate their losses, basically. So that's the second step in the financing process. They're going to appraise the home, make sure that it has value. And then the third step is when they process all the paperwork, process all the loan documents, verify everything that they need to verify. And then the fourth step is closing date. That's the day you sign for the loan and you get the key to your new home. Congratulations, you bought a house. And then the last step in the financing process is servicing the loan. And that is where your mortgage company collects their payments. Sometimes your mortgage company might sell off your mortgage, and then you'll just make the payments to wherever that is. And so, as you can see, during this loan process, this is why all companies have different requirements, different underwriting requirements. And in this time, it really benefits to just know what is going on, what the different loan programs are. And this way you can make an informed decision of what's the best thing for you to do for yourself, your family during this time. I hope that gave you some clarity of whether or not it is a good time to buy a house. It really comes down to you, your preference. Do you want to stay conservative? Are you feeling like, hey, I don't know, am I going to get, am I going to keep my job, all that stuff? Or are you feeling very secure, like, yeah, my job is in high demand, I'm good, I've saved up money, I have money in my reserves, I have money for my closing costs, I have money for my down payment, then you're in a good position. And it pretty much is, like, any time is a good time to buy a house if you're buying the house for yourself to live in. It's, you gotta live somewhere. So if you already have the goals that you want to own your own home, timing the market is one of those things where it's like, how can you time the market so correctly? There's a gain and a loss. So sometimes, yeah, sure, you can time the market very specifically, but other times there just might be just such a short inventory that you might not even get your dream home. You might settle for something less, but you won't get your dream home. Or on the other hand, you might get your dream home, but it might cost you a little bit more a month. So there's always some kind of trade-off. You look at all of your options, be informed, be empowered, and you will figure this out whether or not this is the right time for you to make this purchase, or if right now is the time for you to wait it out. Well, thank you for watching, and I hope it brought you value. Reach out anytime, and I'll see you in the next one.